This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. Join us as we talk with our Chief Tax Strategist, Evan Marshall, about the big, beautiful bill and what it means for your financial planning. We'll discuss new tax incentives for business owners and a limited-time opportunity for retirees to potentially reduce their Social Security tax burden. Plus, we'll dive into an upcoming class on proactive tax and exit planning for entrepreneurs.
Once again in the studio, we have our Chief Tax Planning Strategist, CPA extraordinaire, Evan Marshall. Evan, how you doing?
Doing great.
So you've been doing some traveling. You were most recently spending some time in Peoria, Illinois. So how was that?
It was okay. Very happy to be back in Omaha and being able to serve our clients again. But yeah, great opportunity to see some new places. Yeah, maybe not as exciting as Omaha all the time.
Do you have the next destination lineup? And for those of you listening, so Evan right now is on kind of a 2-year trek where him and his wife are kind of circumventing the entire map here of the U.S. And she does some traveling work in the medical field, and we've allowed him to do this for a period of time. So we hear of his adventures. He was out in Bakersfield, California prior, right? So
correct.
Where's the next landing zone?
Yeah, the next one we just found out we're going to be in New Jersey. So we're going to be on the boardwalk at the shirt shop doing the full Jersey Shore tour.
Very nice. Well, for our folks that live out this way that are from Jersey, we'll just say, hey, what exit? Because that's how you know where you are in Jersey.
Right.
What exit on the turnpike are you obligated to get off at? So I know Jersey pretty well. My dad lives not too far from the Delaware. It's called the Delaware Water Gap.
Yep.
But I'll give you some great places to go view. It is some really pretty country out there. There's a lot of places you can get to by a short car trip. But all right, so speaking of car trips, sometimes you get hungry. You pull into the drive-thru and, you order things like, a burger and
the French fries.
French fries, absolutely. Now, I was watching a couple weeks ago one of my favorite movies, Forrest Gump. It was just, running on like TBS or something. And there's a scene where his buddy Bubba goes through all the different kinds of shrimp. I want you to tell me, like in tax planning, especially for business owners, it's like ordering French fries. There's so many different kinds, right? And we have a mutual client that we were just joking with about French fries. So I guaranteed him we would make you talk about French fries on the air. So when it comes to tax planning, it's like there's different varieties, right? So how many different varieties do you think there are of French fries?
It's the opportunities are endless, and especially if you go to like different fast food places, like no two fries are the same. We'll see how long we can stretch this analogy for.
Steak fries, crinkle cut fries, coated fries, spicy fries, and then they can add garlic aiolis, and I mean, it can get really plenty. But that is literally what you do for high income earning folks and entrepreneurs, specifically business owners. There are so many different angles with which you can show them. You're not doing tax loopholes. You're just showing there are incentives in the tax code, and the new big beautiful bill, as it's called, the BBB, layered in a few more that people need to be taking advantage of. And this literally could change the bottom line of a company by hundreds of thousands of dollars, right?
Yeah, and it's just, the biggest thing is just educating our clients on these new incentives. Like July 4th, like you identified, the One Big Beautiful Bill Act got signed. A lot of new incentives included in the code, especially for those business owners, incentivizing additional business development and just kind of understanding, what is the government currently incentivizing for our business owners, because that's dramatically changed since the last tax change that we had.
Yeah, and so this tax bill made permanent the current tax rates for our personal tax returns. However, corporate tax returns were made permanent the last go-round in 2017. Correct. And I continued to talk to business owners and find out they're operating in the wrong entity. In other words, most people just set up some pass-through entity because that's what they were told to do. But we find for a lot of entrepreneurs, that's the wrong decision, right?
Yeah. And, that initial LLC setup, or maybe the S corporation, or maybe just did a partnership, and they're just letting it ride, it's at least good to maybe get additional opinion, and maybe you're either in the wrong entity structure, or it might be good to add an additional entity. Those are just kind of the things that we talk about with our entrepreneurs, and making sure that they understand, all the intricacies of that entity choice.
Yeah, so if an entrepreneur's out there making a couple $100,000 a year or more and starting to earn good income, he's going to jump into today what is typically going to be, say, 22 and then 24 and then eventually 33% tax bracket, and then it goes on to 35 and 37. When corporate tax structure, if done properly, a lot of people are surprised to know, you mean I can knock this down to 21? Yeah, it's potential, right? So, but again, to make sure, sometimes it's just putting a partnership entity alongside, right? Operating under more than one entity. You know how many I operate under, right? And that's because I'm just playing the game by the rules they lay out. I don't have to cheat my taxes to lower my tax bill, but I have to be proactive in my planning. You've been personally involved in my planning for a number of years now. So I just think it speaks to the entrepreneur. So let's talk about the class that you and I are both going to be teaching along with Mike Schudel coming up. And this is we call it proactive tax and exit planning. You do not have to be thinking about exiting your business to attend this class. If you are running a small business, and small business definition by America Chamber of Commerce is 500 employees or less. So we're talking about, rather large businesses in reality for a lot of folks. You have incentives in this current tax legislative package that you need to be taking advantage of. And we're going to go through some of those examples at this class. When is this class coming up?
It's Friday, August 22nd at 9 a.m. at the Midwest Learning Center.
And we'll get you in and out in under an hour. I think we'll have some breakfast of some kind, donuts or something. I'm not sure what. I know we'll have the world's best coffee because I demand that. But
always.
We'll have a little snack there for you. But we get you in and out in an hour so you can get on with your day. But you're going to learn about entity structures. You're going to learn about liquidity provisions within your company, and then how you can potentially lower your current tax liability, even if you want to keep your company for the next 30 years like I do. Fantastic class. And if you know an entrepreneur and you're listening to this, you might want to let them know. But we do have to have people register. We will have very limited capacity. You can go to retiresmartnow.com and click on the events page to register, or you can call the office to get registered. All right, Evan, let's switch gears for a moment here and talk about a couple of provisions in the big, beautiful bill that are going to affect our retiree clients, which is a lot, and we have a lot of listeners to this show that it's going to affect, because while we didn't technically get no tax on Social Security, we did get an opportunity to reduce the tax on Social Security and give a large share, by some estimates up to 90% of Social Security recipients could actually be receiving this tax-free, and that's through the senior deduction, right? This additional $6,000 or $12,000 for a married couple. So a married couple over 65 has about a $46,000 standard deduction. Basically, that's huge, but it's only here for a limited time.
Correct. And the interesting part about that is it's actually effective in 2025. So that's actually impacting the planning that we're doing for our clients. We had the understanding of the Tax Cut and Jobs Act tax rates being through 2025. 2026 was a bit of a mystery. It gives us a lot more clarity, and it actually gives us more incentives to take advantage of in 2025 to kind of change the planning for this year to take advantage of those new incentives for this year specifically.
Yeah, and for those that happen to be charitably inclined anyway, we've sometimes talked about a donor advised fund is one of the strategies we help clients use. In other words, you can give future years giving today, control an investment account, and then give it to the church or charity you want to in future years. That becomes even more pressing this year, because though next year, if you were doing large Roth conversions or had higher income, you're not going to be able to deduct as much going forward, right? So 2025 is a very good year to set up advanced charitable giving as well, as far as the Roth conversions or charitable planning for your estate planning, et cetera. Talk a little bit about that.
Yeah. So, and there's some changes in the charitable giving structure. So, with the One Big Beautiful Bill, you can actually now deduct some charity, even if you don't necessarily itemize. So now there's some new incentives to still do some charitable giving, which we'll discuss with our clients as part of their planning structure. But those certain incentives are not maybe so keenly advised for donor advised funds, meaning that 2025 would be a good year to take advantage of that tax incentive. If you do have that charitable inclination, just taking advantage of that potential strategy that we discuss.
All right. So if you think you're paying too much taxes, you might want to talk to this gentleman. So I want you to talk we got about 30 seconds left in the segment, Emma. Just explain what a SEPA is to our audience, because you and I both have attained these certifications. I had mine previous. You got it earlier, I think earlier this year, right?
Yeah, at the end of 2024.
Well, you got it at the end of last year, right?
Yep.
And then Mike Schudel got it earlier this year. That's great. I knew one of you got it this year. But so all three of us that will be teaching at this class coming up for entrepreneurs have earned what's called the SEPA, CEPA certification. Can you talk a little about what that's like?
Yeah.
Or what that is?
Yeah, it's a Certified Exit Planning Advisor. So I look at it primarily from the tax realm as a CPA, but David looks at it through the entrepreneur lens. Mike looks at it through the financial advisor lens. And what the certification does, we just are educated on the different exit opportunities from a business, kind of strategizing, okay, maximizing the potential value of the business, the options of how you could exit your business, and kind of being that strategic coach through that whole process, just being that advisor to help unlock the true value of your business.
And I think one of the things that you can do for clients too is we should just put it out there is if they've never had their business valued, you can get your business valued, and it's not as expensive as you might think to get a formal valuation done. So you at least have an understanding, what is my business worth today? And then through the planning, proactive planning, in 3 years, what could we increase the value to if you get all your numbers aligned to industry standards, et cetera. But anyway, a lot of great stuff. So this class, again, is going to be Friday, August 22nd at 9 a.m., but you must register. Evan, thank you so much for stopping by.
Thanks, David.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week. Companies on the 2022, 2023, 2024, and 2025 Inc. 5000 lists are ranked according to the percentage of revenue growth from 2019 to 2022, 2020 to 2023, 2021 to 2024, and 2022 to 2025, respectively. The full 2022, 2023, 2024, and 2025 Inc. 5000 lists were published in August of each respective year. Smart Wealth paid Inc. magazine a non-refundable processing fee each year to be considered for inclusion on the Inc. 5000 list.